Hello guys, in the last video we had actually learned kinds of accounts. So in this video we are going to learn about the golden rules of accounting. So we have three rules, for one for personal account and second one for real account and third one for nominal account. So now what is the rule for personal account? So we know that every account it has twofold effects. So every debit has an effect on credit. So yeah, so debit, the rule is debit the receiver, and for the credit we have credit the giver. Debit the receiver, credit the giver. Now when it comes to real account, debit what comes in, and for credit what goes out. And for nominal account we have debit all expenses and losses, and for credit we have all incomes and gains. So now let us take an example and understand how to apply these formulas, these golden rules. Okay, now we have five set of questions now, and we'll solve them by using the last technique, that is kinds of accounts and golden rules of accounting. Now, the first question says that on Jan 1, 2020, Mr. Ganesh introduced. So the first question, they might give you introduced, or they might even give commenced. Both means same. Commenced business with cash 60,000. So here we can see two types of accounts, that is Mr. Ganesh, and we can see cash. So let's write Mr. Ganesh and Mr. Cash. So before you start solving this journal entry, we must always remember the important point. We must always think that this is your business. You must always solve the question on the perspective of a businessman. You must always assume that you are the businessman. So the first question is, Mr. Ganesh, that is, you are investing 60,000 for your company, that is for your business. So the one thing that is cash, and the other thing that you are introducing, that is a capital, right? So, and next one, it is capital. It is not Mr. Ganesh account, because you are in the business. So one is cash account and another one is capital account. So here let us apply the real account rule. We know that cash is a real account. So what is coming into our business, that is money is coming to our business, that is cash is coming. So the debit rule, that is for the real account, the debit rule is debit what comes in. So cash is coming in. So it is cash account debit 2. So we always know that every debit transaction has a credit effect, right? So we can write capital account simply. Now let us learn why we have to write capital account here. The capital account, why we have to write means, so the actually the credit is the keyword, that is the businessman Mr. Ganesh, you are giving some money, that is cash, to your business. So credit the giver to capital account. And for being, that is narration, you can always write the same statement which is given in the question, or you can also write in being, cash introduced. If you want to write in a short form, you can write. If you have no idea what to write on the narration part, you can just copy the questions and you can write that. Now the second part, it is the money is paid to the bank. Okay, so what is paid to the bank? We cannot simply pay anything, right? There should be something. What is there? We have paid cash. So what, to where we have paid? That is to bank. So now let us see. So cash is a real account and we know that bank is a personal account. So what is happening? We are giving the cash, right? Credit what goes out. So the cash comes to the credit side and bank goes to the debit side. Why bank is on debit side? Because debit the receiver. The bank is receiving the amount. Now let us go to the third one. That is purchased goods for a cash. So in this, always remember, we cannot write goods account. We always use stock account. Okay, but here we are going to write purchase account because purchase is taking place. Okay, so for the purchase account, and the second one it is cash account, right? We're getting cash. So no, we are not getting cash, we are getting goods. So debit what comes in, purchase is an asset, right? So it is coming in. What is coming in? The purchase is coming in. So it means comes in, which means it's a we should write in debit column. So what is going out? The cash is going out. We are paying, right? For the purchase, whatever we have purchased, for those goods we have paid some money, that is cash, that is going out from our business. So we are going to write cash account in credit side. So now fourth one, that is sold goods for cash. We have sell some goods for cash. So there are two accounts, that is sale account and cash account. Okay, so now what are we getting? We are getting some cash, right? We have sold something, we have sold something, and we got some cash. So debit what comes in? What comes in? Cash comes in. So what is going out? The sales are going out. Sale account. So the fifth one, that is we have paid salary. So we know that salary is a nominal account. So in nominal account, all debit X are expenses and losses. So you wanna write salary account, debit 2. So what will give from paid to salary? That is we write cash account. Okay, now let us go to another level. Let us assume that this paid, the amount which is paid from bank. So what are we going to write? If they have not mentioned anything, they're just given you that the money is paid, we are going to write cash. If they have specifically written from bank, then this will be bank account. So we will not write cash. So I think for this instance, for the beginners, this one is the basic, and if you remember this golden rule and how to apply the golden rule, I think this is enough. And thank you. Don't forget to like, share and subscribe to my channel, and all the best.